Good morning, everybody, and this is your S&P 500 day trade setups for today. Now, a couple of things. We obviously had a acceleration bar to a level, and then we've had a gap down. Could be a bit of an exhaustion gap brewing, and I'm going to explain now why. And one thing I see comments in the comment section around, the confusion between the short-term and long-term structures. So just be careful when we're talking long-term. This is giving us the warnings for the entries on the short-term. So long-term, we've got a head and shoulders target here, which is still down in this zone. So there's no structure on the target, or I suppose there's a bit of structure there. And then we have this breakout here, which was tested in the past. You can see it was tested there, and then acceleration. And we're at this level here now. If you look at the oscillators, we have a grouping to the downside. So, we are extremely oversold at the moment. And what that equates to is be careful. You don't want to be chasing shorts that are down here. The other thing is the structure that we had yesterday was really an indication that there was nothing happening. Then sort of late in the session, we had this drop. Now, the other thing that you need to look at here, and I'm just going to do it from there, and I'm going to do it from there. I suppose I could take it up to there. That would work. So what do you see? You see a wedge where 61.8 is around here where we had all this chaos. We've just dropped below it. We found support, or we're looking to find support here. So either at this point or at this point here. So that is 38.82 and 39.21. So 3900 is obviously a number which you need to pay attention to. There is also a little, I want to see if that's been tested. It's a swing high here, and that is open. So we haven't tested this breakout here, and that's fairly close. So that is at 3900, 3908. Okay, so when we look at the higher time frames, we have a wedge. Okay, we've had a long uptrend, we've had a steep pullback, and we're coming into an area of support. So oscillators group to downside. Be careful. The selling at the moment may not be over, but it's definitely, there will be some buyers coming in here that are looking to balance. Now, the other thing to point out is on the monthly, we are in a bullish trend. We've got this massive divergence formed, and we don't have structure here except for all the way down here. And even that, although it's far from us from a day trading perspective, but even 3400 would be a bullish entry on the monthly chart. So, when we're talking macro view, this is what's going on. And we also still have this wedge that is formed. Anyway, let's just get down to the low time. So, higher time frames are just indicating be careful. Be very careful. The only one that is different at the moment is the weekly. So weekly is saying, crossed over far apart. Well, not yet. We're about to cross over. And we've had 3 weeks of down move. We're coming into this zone here where we found support, and we've got a crossover. So there's a bit of a bit of a bearish setup here, but it's not ideal for me. It's definitely not ideal right now. So anyway, that is the macro view. So if we start drilling down, and we start looking at the 3-hour, there you see your wedge a little bit clearer, and you can see very clear in actual fact that we have this wedge, and there is 5 touches here, or more than 5 touches. So it's 1, 2, 3, 4, 5, 6. So we have 6 touches. We sort of coming into a squeeze. We're coming up to support. Everything here is indicating that the selling is fizzling out, and you should expect something to transpire. Looking at the hour, I think the first thing to look at from the hour perspective is that entry. So we had this swing low, and you can see if you look at it here, we had a grouping above it in the morning first, so that was an automatically indication that we were coming back there. So that was the area. You can see there's a massive range bar, and notice how it sort of was a fake out of the wedge. definitely tried to fake out of that wedge. So what I would just do is just do that. That's my new structure for my wedge. Gives me one touch up there. That's 1, 2, I'm going to call that 3. So that's 3 down there, 4, 5. So that's 5. Perfect wedge setup, textbook wedge setup in actual fact. And now we're looking for a break of this trend line for that to happen. So what we need to do is just bring in our levels. And I'm just going to take that inside one there. So a break of, what is that? That is 39.68, 39.68.8. So 39.67. Break and retrace of that area would then send us up to 4,000. Okay, to come and test 4,000. So yesterday you could see we again were above 4,000, then we had tested it with a range bar. If I drop down to 15 minutes, you're going to see a little bit of a deeper structure. So you see that's the level, but if you listen to what I say, when you get a close above the level like that and it's all over the place, you don't really want to take that because it's not clear. But what you can also do is just look for additional levels, and there, right there, is an inside bar. You can see price went above it. There's an inside bar on the 15 minutes, or sorry, inside tail. So that is part of the structure. Lines up perfectly. You can see how we tried. Then we've got a hanging man, and there's your entry right there below that structure. So your entry was here, your stop was up there, so you had a 200-point stop loss. And to be honest, that would have probably been the target I would have aimed for anyway. Well, I did aim for. That's 295 points for 200 risk. We ended downward trend was a perfect setup in that zone. So at the moment, if you look at what's going on, we've gapped down. Well, there's a couple of gaps down. So that's actually where the market closed. This is all sort of pre-market or after the market closed. So market closed up here at 39.61, and since then we've had a couple of gaps to the downside. So not an area I want to be short. I would want to be testing. I'm just going to adjust this here. I'd want to be testing this area here. If we get above it, then I would expect a break of this trend line, which would give us some structure. Don't expect that to happen without a massive amount of help. We do have the jobs number, and I think non-farm payroll should also come out this week, if I'm correct. Let me just check. It's normally the first Friday of the month. I want to see if it's going to come out this Friday or next Friday, and I know Labor Day is coming up as well, so that could also impact when the data is released. But nothing wants to work this morning as usual. So today we do have jobs number, so we've got the initial jobs number coming out today, and then tomorrow we're more than likely going to have non-farm payrolls. We've got unemployment and we've got non-farm payrolls. So that could be the catalyst that could drive us in a direction. Okay, and if you look at the macro setup in the higher time frames, it's looking like the selling is slowing down, but the trend is still down, so you still want to be trading with the trend. Okay, so for me today, quite simple. Still looking to short this. We're looking to short off this area here, 39.65. That should close the gaps as well, should give us a bit of structure. Could even go a little bit higher than that. So in other words, we could look for this trend line. So a little bit higher would be 39.71. So somewhere in this area, I would expect another opportunity to short. Your target is 39.21 and 3900. That is your target to the downside at the moment. Just be careful, keep those stops tight, because if you just look what's going on, we just come back to a 3 hour for argument's sake. Just look what's happening here. We're getting a pretty decent grouping to the downside. This diversion that we had yesterday is null and void at the moment, so that's not helping us too much. And on the 8 hour, look at the tight grouping here. So it's not an area you want to be taking long-term shorts. Okay, so that's kind of the view that we've got here. Obviously still want to be short. You are in a downtrend, but you want to be short higher up. So this is a structure higher up that you're looking for. If you can get short off that, That's the opportunity. If we sort of get a rally all the way up and we start breaking up above 4,000 again, and we get a weekly close up above 4,000, that starts to indicate something different. So yeah, be careful. I think that's the moral of the story today. Be very careful. Keep those stops tight. And it's not seeing it there. Sorry, you're seeing it on the 8 hour. So this was a signal of confusion or a range, and then we broke the range to the downside. But you've broken it with an exhaustion bar. And if you just look at it on the hour, you can see we sort of stayed in this range up until, what time was that? That was 5, 6, 7. So until almost midway through the session, almost lunch, just before lunch. And then we sort of had this close here. Monthly close happened, and then done. Closed on our low, which is very rare. So then we've got this big move down. And the monthly has been a big down, big up kind of situation. So you can see a green there, massive red bar, massive inside bar, almost an engulfing bar here. And now we've got an inside bar. So this is just confusion still, and we've got a massive area of support that we're playing with. Okay, anyway, that's enough for me today. Obviously still looking to short this from these levels, but pay attention to this wedge. If this wedge gives way, then you're looking for a bigger move up. Once this structure is gone here, there's the next bit of structure right up there at 4100, 4112. Okay, anyway guys, that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.